Hey there, I am Shelby Renfeld with the Renfeld Group at Keller Williams Heritage, and I am here with Wes Kleckley, the owner of Pilgrim Mortgage. And we just wanted to come to you and kind of talk about what's happened in the industry over the past 5 years as related to mortgage rates and the whole mortgage process, and what is happening now and what Wes thinks is going to be happening in the future. So welcome, Wes.
Yeah, thank you. Thanks for having me. Yeah, unless you've been under a rock, I mean, this has been the wildest ride in mortgages. Since I've been doing it, I've been in the business for 23 years, but it's been crazier since the meltdown, the 2008 crash, right?
Yeah.
We went from the highest of the high in 2020, 2021, most sales and most mortgages done ever, the lowest rates ever. Yeah, that down in the twos.
Yep.
And then inflation got up to 9% and mortgage rates got up to 8% at some point.
It was crazy. I remember when the pandemic hit, and I was like, well, I guess we're not selling real estate this year. And then all of a sudden, holy smokes, the world. What was the lowest rate you saw?
I mean, I like some in the low twos.
Yeah, the lowest I saw was 1.75 VA loan.
Yeah.
I looked at the guy and I said, they're paying you to live in this house, right? Essentially.
That guy will never move.
He will never
He will
move.
never sell that.
We'll just take him out of the database. No,
He's probably deleted.
no more follow-up.
Probably unsubscribed already.
Exactly, but right.
But yeah, it was tough. I mean, it went from 2020, 2021 just being the high, and then 22, the year I bought the company, by the way.
Oh.
Absolute worst time in mortgage history to buy a mortgage company. But what was done is done. And then
Yeah.
it just fell off the cliff, right? And rates shot up to sevens and even over 8%. So
Yeah.
everybody naturally freaked out.
Yep.
That was on the heels of 15 to 20% appreciation
Right.
in homes because there was such a buying frenzy. We
Right.
had that much demand because rates are so low and there's so much affordability.
Right.
Prices just shoot up.
Right. Yep.
20, 30, 40 offers on houses you saw.
Yes. Crazy.
Unless you had cash, it was very hard to go under contract.
Right.
So what a wild swing from that to what we went to.
Yeah.
And then that's why we've lost so many realtors in the business.
Yeah.
So many
Oh, right.
so many lenders, so many mortgage companies. But we're here to tell you the good news is things are kind of turning. I believe, and a lot of industry experts believe that this is going to be a turning point this year.
Yeah.
Again, rates went from 8 down to around 6%. We're starting to see it at our company. Applications increase. Our applications are actually up 75% month over month.
Which is crazy.
Now that's kind of natural because people are now past the holidays. So
Right.
typically people start applying after the holidays. They're like, all
Right.
right, new year, I'm going
Right.
to buy a house. But we're seeing a higher rate of applications
Than you did last January?
than we did last January.
Okay. Well, that's good.
And there's just been a lot of buzz around the rates. We finally got 3/4 of a point total in the Fed funds rate that was cut, right? Now, Fed funds rate doesn't directly impact mortgage rates, but over time it
Yeah.
does.
Right.
And there's going to be a new Fed chairman coming
Yeah.
in May. And I can promise you it's going to be somebody that's going to be dovish and is going to try to bring rates down even more. So
Right.
expecting another 2 or 3 rate cuts this year. So when they do drop it, a lot of times mortgage rates go up.
Right. No, I know.
Temporarily.
Right.
But here's the deal. They went down prior to that when
Right.
the Fed signaled that
Right.
they were going to.
Because they build it gets built in.
Yeah.
Right.
So the
Yeah.
Fed, he'll make an announcement. Yeah, we expect we're probably going to cut rates in a couple of months. Well, mortgage rates go down.
Right.
Right. Because they trade on the news.
Right.
But anyway, expect another 2 or 3 cuts this year. There's a lot of things that our government, the administration can do. They announced last week that they intend on Fannie and Freddie buying $200 billion worth of mortgage-backed securities.
Nice.
And immediately mortgage rates went down.
Yeah.
Right. So what they're doing, they're buying the supply out there,
Mm-hmm.
which is forcing the price up and the rate down. So there's a lot of things that can happen. They're going to have a big talk next week about their housing initiative.
Okay.
This is an election year,
Right.
in November,
Right.
And I can promise you they're going to do everything they can to make people feel better,
To get reelected.
right? And people have been feeling pretty down about the housing market, so
Right.
they know that's a big deal, and they want housing to be more affordable. So I'm looking forward to seeing what they're going to announce next week. I think it will be a market mover.
Oh, good.
Yeah.
Okay, switching gears really quick. So something I've seen over the past year and a half up to 2 years is I'll get a seller contacting me and saying, hey, we want to sell our house. And my first question is, when did you buy it? You know,
That nuts.
because what I have found in some situations is, the rates dropped so fast in 2021, right around there, that people just went out and bought a house, and then they went, oh, wait, maybe I should have moved to a different town, or maybe I should have, whatever.
Right.
Because people came from, well, we all know, from all over the country. And so, they moved to an area and they didn't, maybe they wanted something different or whatever. So now they're like, oh, we want to sell. So I go and I look at, what they paid for the house and what they owe and then what it's worth today. And they're upside down. Yeah. And so then you look and say, well, what do you owe on your mortgage, And so there have been cases where they're like, well, we owe a lot less on our mortgage than, that. So I'm like, okay, so the way you need to look at this is you're losing a little bit of equity on your last house, and not necessarily this transaction. Yeah. Makes them feel a little bit better. But have you seen that when people come to apply for a new mortgage or that kind of thing? Have you seen that same thing?
Yeah, we do. I mean, a lot of times people think they have a lot more equity than they actually do.
Yeah, right.
And they get with you and you run the real numbers.
Yeah, right.
But to your point, I think it's just an individual case-by-case deal, right? If they truly need to move or they want to be in a different area, we just got to give them the numbers. You give them the numbers on what their net's probably going to be, right? We're going to give them the numbers on what their next house is going to look like as far as a monthly cost,
right? Yep.
How much cash they're going to need.
Yeah.
And a lot of times, I mean, they say, you know what? Okay, that's not good that I've lost a little bit of equity over here, but I can get into this next house.
Right.
And still my monthly payment is this.
Yeah.
And now with rates coming down a little bit, more people are going to be applying.
Stabilize.
More people that are applying.
Yeah.
More demand out there, more people putting offers on houses, prices are stabilizing.
Right.
And we will see, I think, overall home appreciation this year.
Yeah.
Right. So home prices are stabilizing and now will probably start coming up when all these buyers come back to the market.
Right. Yeah.
It's not going to be 21.
Demand.
It's not going to be 21 again.
It may never be 21 again. We will promise you that.
I think we'll get back to a more normal demand.
Because we've been like this and then like that.
Yeah. And, if the demand gets too much, which it could be, I mean, it depends on what they do with these rates, where the market goes.
Yeah.
If a lot more demand comes, we are still short overall in housing.
Yeah.
The builders need to build a lot more houses. But what have the builders been doing? They've actually kind of pulled back a little bit because there's a lot of uncertainty this past year.
Right.
So I don't blame them.
Right.
But I suspect there's going to be a lot more building permits being pulled and a lot more construction going on this year.
Yeah. Well, we hope so.
Yeah.
We hope so.
We need it.
I saw and maybe you saw the same thing. The luxury market, which is mostly what I do, is it didn't, it did come down for sure, but it felt like the hardest hit were the lower price points. People that are buying in the lower price points are more dependent on their debt to income ratio. People in the higher price points are typically have more flexibility and they know that, they can refinance, they can float a higher payment for a little while. Yeah. Did you see the same thing?
We did. Okay. We did. I mean, because when you're talking about someone buying their first home, a starter home, 1% in rate makes a big difference to them. Right. You talk about,
huge.
$200 difference in payment for a first time home buyer is a totally different deal than $200 for a luxury buyer. Right. But luxury buyer's like, okay, I'll absorb it right now. It's fine. Let's refinance later. Right. So we definitely did.
Yeah. We saw the same thing. So 2026, do you have anything else you want to say about what you see happening by the end of the year? Where do you think, if you had a crystal ball?
By the end of the year.
What do you think?
So there's a lot of people that put forecasts out there. When I say people, I talk about organizations, Fannie Mae, the Mortgage Bankers Association, NAR, National Association of Realtors, all these folks would put their forecast out. Right. They have all put rates just in the low sixes, which doesn't make any sense to me. And there's a guy I follow, we subscribe to his services, MBS Highway, Barry Habib. He's actually on the panel of Fannie Mae now. Okay. He just did his forecast this past week, and they are projecting rates are going to fall around that in the high fives, 5.75, maybe even 5.5. I believe, again, the administration is going to pull some levers to make sure people are feeling better by the election in November. Yeah. That I believe we're going to see a 5 in front of that decimal being normal by the end of the year.
So we have, just for us, in terms of listings, I think if I remember our count, we have about 22 pocket listings, people about to come on. They're kind of waiting until that spring rush. And so I think we're going to have this huge increase in inventory. And so what I've been telling my current sellers is like, hey, we're overpriced. you need to adjust now because you're about to get a whole lot of competition.
Yeah.
You know, but then again, if the buyers increase too, that'll help stabilize. So
Yeah, I mean, overall, I'm very optimistic about this year. I
Good.
think it's going to be a big turning point. We're doing things at our company to be ready for it. We've hired a ton of operations people and new leaders, new staff to be ready for the influx.
we just want to say thank you for hanging out with us today. And if you have any questions, we will link both of our contact information in the comments. Again, this is Wes Kleckley with Pilgrim Mortgage, and you lend all over, right? All over.
Anywhere in Texas, we're
anywhere.
licensed in 18 other states. So
He and his team are amazing. We refer everybody to them. All of our buyers go direct, and sometimes our sellers. He also comes and helps us at different seminars that we have so that he can explain the mortgage process even to the sellers, so that when they get a buyer coming in, he can kind of help, navigate what that looks like. So thank you for coming. Again, I'm Shelby Renfeld with the Renfeld Group at Keller Williams Heritage, Wes Kleckley with Pilgrim Mortgage, and we will link everything in the comments. Have a great day.